Good evening, Manoj. Good evening, everybody. How are you?
I'm good, Mukund. How are you? And how's
How was
everyone
your
else?
week?
Week was good. Made quite a bit of money, and then lost some yesterday, and then again regained everything again. So, yep,
Good, good.
week was good.
Yeah, no, I after the Friday when I called the bottom, did well. Monday, Tuesday, took money off the table, and then after that, I'm still not convinced this market is going anywhere. So I just played it safe and easy. Um,
Right,
so I was just hanging on the sidelines, watching a lot of stocks, but not really trading a lot. Well, we had good earnings week this week. At least the first earnings week kicked off with some decent companies: JP
hmm.
Morgan, Pepsi, Delta Airlines, Domino's, um, Citibank, Wells Fargo, PNC. So lots of earnings. Couple of stocks did well. Most of them, I think, today, especially because the bank earnings were today, right? Most of
Yeah,
the stocks came out today, from Blackstone to JP Morgan. Next week is, of course, a continuation of bank earnings. But today, even with good earnings, JP Morgan was, mostly soft. The only company that I think kind of did okay was JP Morgan, and to a little
right,
bit, but everybody else is struggling a little bit. I think even Pepsi had good earnings, but Pepsi, the thing is that it's gotten beaten down so much because of this. I don't know if you saw or if you're following it. Apparently, Walmart has said that they are seeing some changes that people are now doing to what they buy because of taking Ozempic, which is the weight
hmm,
loss drug.
right,
So they're saying there's some slight changes in the way and what people order on what
right.
people come and buy. For example, they're cutting down on snacks maybe, but that's why Pepsi has been down. Coke has
Yeah,
been down. Uh,
yeah.
General Mills has been down. So they've been all down. Food overall, given how high inflation, I think this has got more to do with the fact that they raised prices so high uh,
Mm-hmm.
that consumers are probably cutting back a little bit, but
True,
not
true,
so much because of those.
true. And
Um,
all those stocks like Dollar Tree, Dollar General, all those Target had beaten down so much. That's I think primarily because of that.
Yeah, yeah. Prices high, inflation high. There were
Yep,
three stocks that we were watching last week. Road, which is carpenter technology, flat to mostly okay. Celestica did okay as well, not higher much. JBL, Jabil Circuits did very, very well of the three that I mentioned last week.
right,
So overall, I think we'll see a continuation of chop and churn is my own perspective. But
right.
more earnings next week, the big two, Tesla and Netflix.
Yeah, yep. Next week's guide. In fact, I'm tracking both of them chartically as well. I have carried my shorts into Netflix. Tesla, I have no position because I hardly trade that stock because it's very difficult to trade shorts on Tesla. It's very difficult stock to be honest. And I have burnt my hands in the past, especially in the last year's bear market. I was bearish on Tesla. I couldn't make any money on Tesla shorting it. It's a very risky stock to short to be honest. Even if you know where the direction is, unless you trade lips in terms of the bearish position, you actually cannot make much money unless you have like I'm not a very diamond hands kind of a person who can bet big money and then keep rolling it over. I
Yeah,
don't do
no, I
that.
think Tesla and a couple of other stocks also, Nvidia, you don't want to short
Yep.
except for the
Yep.
day. I think it's too hard and too unpredictable. Uh,
Absolutely.
the stocks are really unpredictable. What I mean is they're mostly going up. So if you
Right.
get a short opportunity, you want to take very short opportunities and go from there. But
Absolutely.
okay, let's do a quick review of the markets overall, starting with obviously the S&P 500 and then go from there. Last week we said, be careful, be watchful. It was bullish, but still be watchful was our message, right?
Right. Okay. So here it is. The pattern is still holding up, but there are certain risks to the pattern that I was talking about. So last week, as I said, that it is a dragonfly, which definitely is bullish, was bullish. We saw bullishness last week, but what happened yesterday and today is something that made me rethink whether next week would be bullish or not. So I have actually carried my shorts for the Monday and Tuesday. I don't know how profitable it would be for the simple reason that if you look at this particular candle, this the way it is holding up, the candle is green still. It's not red. One. Secondly, inverted hammer many a times is not bearish either. It is inverted hammer, but it cannot be called as bearish many a times because it actually is nearing the bottom. This dragonfly and then inverted hammer exactly following a dragonfly does not give me a clear confidence that it wants to go down from here. Although I have carried my bearish bets, but not just based on the chart of ES and NQ, there are other reasons why I have carried my bearish position, and I will talk about it later. So based on just the charts, daily and weekly, slightly bearishness, but I wouldn't call it as a too much, bearish position for me to, for anyone to, carry forward to. I don't know whether it wants to go to 4,500 anymore, because yesterday's reversal as well as today's reversal is a sign that markets does not want to go up, at least not in a rush and fast and furious manner. So I would be very careful in carrying my longs. I would short, cover up as early as I can, but I would not be overtly bullish as well.
Yeah, I think the key
Yes.
part yesterday was the CPI number.
Yes.
That was a tough number to swallow, right? Given that inflation is still not going up, it
Right.
creates a few doubts, I think, in a lot of people's mind about whether the Fed is really done. When inflation being at over 3% is going to be tough. And especially when it's edging close to 4%, that's twice, that's 100% more than what they want to be at. So it's going to
So
take a.
what happened yesterday was not just the CPI. I mean, of course, 3.7% CPI is not something that anyone would want to be comfortable with. I know, I mean, of course, you would have also tracked what happened with the bonds. 30-year bonds giving you a tail of 3.7%, 3.7 pips is something which is not a healthy sign. It tells you that even if the prevailing yield is 4.8%, which itself is at a 10-11 years high, and that gives you a tail of 4.83%, which means market wants to bid lower price for the current prevailing market price itself. That tells you that the government, the people itself, I mean, bonds auction of $100 billion on the day of CPI itself does not give healthy sign for the investors to be confident that Fed would be able to probably cater to their would be able to tame inflation for a longer period of time. That was the reason why markets fell yesterday, and then it continued to fall today as well. I mean,
Yeah.
that's of course my macroeconomic scenario, but I don't know how the macroeconomics shapes up in the next few years. But that was the reason why markets fell, and then it continued to fall today as well.
Yeah, and I think, surprisingly, the events from Middle East haven't had that much of an impact yet, I think. They
Yes.
would, should, could, but they haven't had. I think maybe it's an overhang at the background, but it's getting a little bit difficult to be able to figure out why it is not. How are we doing in terms of SPX? Pretty similar, I think. SPX and also the Nasdaq QQQ, the futures
So
of
this was SPX, which is SPY, and
yeah,
next
Nasdaq
is
is also similar.
similar, pretty similar. I mean, there is not much difference in terms of how they behaved. Last week it was hammer. This week it is close to inverted hammer. You can call it a shooting star as well. But again, implications are not much different, because the way markets have been trading for the last few weeks is a sideways pattern. And in sideways pattern, you cannot really conclude whether this shooting star or inverted hammer would give you a proper result in terms of bearishness or whether bullishness. So I would watch each day as closely as I would. And the real reason behind that, my bearishness would be clear when I talk about few stocks. I would not want to, reveal why I'm not talking about it as of now. But the more we move forward in terms of after the key indices, I would talk about why I'm bearish on the stocks.
Okay, how are we doing in terms of the Dow?
Dow Jones, not much clear. I mean, luckily, okay, so I'll just tell you one thing that has happened very clearly. It has reversed from the breakdown of inverted, the head and shoulders. So this was head and shoulders, which it broke down, back tested, big candlestick, which is bearish engulfing pattern, and then now we are getting is a inverted hammer. So reversal on the daily, but nothing happening in terms of the weekly. So as of now, on the daily for the next couple of days at least, Dow Jones looks bearish. I don't know if it wants to break down of this big grand line which has been holding up for last 3 years. This will be channel breakdown. Whether it wants to break down or no, I don't know. But in terms of daily, there are next couple of days looks bearish for Dow Jones.
Yeah, I think overall, if you look at the Dow and the components that make it up, United Health had decent earnings, not great earnings, but decent earnings. I look at the individual components, until Apple and some of the other ones come through, CRM, I think it's going to be just mixed for most parts. I'm not very bullish. I'm not very bearish. It's tougher to be able to make that read.
True. And that's
The small caps. Small caps seem to have broken down even further.
Absolutely. So way too bearish, to be honest. I mean, the key trend line which we were talking about last time, it has broken down. The key channel broken down, and this is not a healthy sign. The only thing that can help it to result into a failed breakdown is this demand side. This demand zone is critical. I mean, look at it. 2020 high, then reverse from here, then did not break down in all these last 2 years. So whether it manages to hold on somewhere around here between 1620 and 1730, that's something to be watched for. But 1620 again from here is like more than 5%, 6% downtick from here, with where we are right now, 1730. And that's not something I know that gives you any confidence to be long small caps. I'm not holding any short in small caps. I'm sorry.
I have a question for you.
Yeah.
When do you go with the trend line versus when do you go with the channel? Like, for example, right now you mentioned it broke the green trend line.
Right.
It also broke the red channel. The red channel seems like a longer time frame.
Right.
The trend line seems like an annual. So when do you use which one?
So it depends upon what your time frame is. For example, if I want to carry my short for the next couple of days, I would definitely follow the trend line, which gives me enough. Just look at this particular day when it broke down. So it broke down somewhere here, back tested, went into 20 AM, and then again failed, and then they failed big time. So last couple of days failure tells me that it wants to go down further. I won't be surprised that it actually goes down all the way towards 1700 and maybe lower than that as well. So that tells me that it has broken down, it has back tested, it has broken down even for the channel as well. So channel breakdown, trend line breakdown, both the things, clear signal. Next couple of days at least, it wants to go down. Now, the reason I'm just saying couple of days and not couple of weeks is because of this demand zone, which is right underneath. If the demand zone weren't there, I would have definitely carried my short even further, more than a week as well. I would have maybe carried 1 month output options. But since it is just exactly above the demand zone, I would definitely not be carrying my shorts beyond a couple of days, unless it falls below this to 16, 20, 30 kind of a level, which is, I don't know whether it would. I would definitely not be carrying my shorts beyond that.
Got it. Okay. How are we doing in terms of the 10-year yield and the dollar index?
Give me 1 second. Oh, okay. Here it is, crude.
Okay.
That's something that is very, very interesting to watch for. So I was almost bearish. I did not. I mean, of course, I did not carry any position. I was almost bearish here. Gapped up, came here, made a reversal morning star pattern. Now this is something which is very critical. Just like we had Dragonfly last week. Similarly, we had morning star pattern exactly at the channel support, and to support it, we had a big red candle today after those production cuts announced by the OPEC and OPEC plus. That gives me a sign that crude will definitely not stop here. It has some more lag, probably heading all the way towards this supply zone where it reversed from last time. So probably 93, 94, it should come again. Crude is not stopping, is my sign, is my view.
And also, of course, given what is going on in the Middle East, that is going to be a challenge.
Absolutely. And here, another learning, tweezer top. Now, what is a tweezer top? Basically, when you have a green candle and a red candle, wherein the open is almost the same. Look at the open here, sorry, high, and look at the high here. High almost same, close almost same. And that reversal tells me that market, your 10-year yields probably are topping out somewhere here. We said this last week as well. It did not. It again made a new high kind of a thing yesterday, reversed big time today. Chances are 10-year yields are again topped out here. The reason I'm saying this is, of course, based on what technicals are saying. But technicals many times does fail in terms of if we follow monthly or bigger than channel, the bigger time frames. And the reason I'm talking about bigger time frame here is about stock, which is Nvidia. We'll come to that later. But for me, 10-year yield is top for now. And then we go to dollar index. Okay, I was bearish here as well. I failed. The reason I failed is this. It was a doji, and after doji, what happened was a big reversal candle yesterday. So it reversed from the lower end of the channel, and then again I created a hammer. So I don't know which way the dollar index wants to go. These two candles tell me, plus the bounce from the channel, probably somewhere around 107, 107.40 should come again. And after that, we will see whether it wants to go higher or not.
Yeah. I'm not following the dollar as much, but this tells me this has got some room to move higher. Just looking at the chart, it's got a lot of room to move higher, at
Right.
least the 106 to the 107, which is a big move for the dollar.
Absolutely.
Okay, that's good. We covered all of the major ones. Let's
Right.
look at the 3 or 4 earnings coming up next week. First one, let's start with Netflix. The interesting thing about Netflix is how poorly it has performed since the last earnings. I think what
You
I
want me to pull the chart up?
NFX, Netflix.
Yep. I have carried my short into the stock, so definitely I know the ticker. Yeah. And I'll tell you why I have carried my short. So look at the channel. Look at this particular chart. Big trend line, which was from December 2018 all the way here, where it was difficult for it to cross past, then cross past, and then again broke down. Broke down right here. That's one. Second, 200-week EMA. Third, megaphone. So 3 clear signs that Netflix is done with in this particular leg. Megaphones normally result into a big breakdown. So I wouldn't be surprised if the stocks come somewhere around at least 280 to 285 kind of a level. After that, I will see whether it wants to go down further or not. But definitely looks to me that 285 kind of a levels are here to come for Netflix.
Wow, you're targeting 280. I was thinking I'd be happy with even 320. I was
Yeah, it
thinking
comes, but
320. To be honest, my weekly and my daily said 320 is enough of money. Enough. You can make enough money going from 350 to 320.
okay. So normally the reason of these target prices are based on the patterns that the stock is particularly making. So the high here was 484 and the breakdown point was somewhere around 375. So at least 100, 120 points. So 100 points would be like what? 255, 240. Yeah. So I'm not targeting 245, 250, but at least 285 where the next support exists. So that's where I'm targeting.
Yeah. And also it depends on the earnings next week, right?
Absolutely. Absolutely. And Netflix is a big company.
I don't think it's going to be blowout earnings. The feedback has also been so far that their advertising revenue tier, which they increases the price for, is not performing as perfectly as they would like.
Wow.
In the US, the whole conversion to a password crackdown has mostly been done. So any big news triggering the stock, except for profitability, is not going to be a very news. And plus, they're looking to raise prices again.
Wow. That too during inflationary times when people are already, finding it difficult to save money. I don't know if whether they would be able to continue to hold their subscription for Netflix.
On the weekly on Tesla, I'm still seeing consolidation to the 250 range. I don't see a breakdown yet. Just go to the weekly chart on Tesla. And I'm still seeing consolidation more than anything else. If you look at the trend line that I drew all the way from, I think it was November 21, hitting those 2 tops, just from November 21 all the way down. And then from the bottom as well, I still see consolidation. I don't see a big move up or maybe even a breakdown, but breakdown is possible. I don't see consolidation. I mean, I see a consolidation. I don't see a breakout.
Okay. For me, I'm just, following this particular channel. If it breaks down of this channel after especially this inverted hammer, I would be bearish. But even if I'm bearish, I'm not going to carry any position into Tesla. So it doesn't matter. It would matter in terms of, the way indices react to, because it's a big beast, but I wouldn't be carrying any position into it.
Yeah. Those are the 2 major earnings. We have a couple of other companies as well, TSM, Goldman Sachs, Bank of America, and ASML that are actually coming up next week. And you also have said that you're watching GM and Nvidia. Let's quickly go through both of them and then wrap it up from there.
Sure. There is a reason I'm watching GM very closely. So 2020, this is September 2020, key trend line, breakdown and breakdown continuation. Broke down last week and it has continued to carry forward that breakdown. So chances are it is not stopping here. Maybe somewhere around 24, 25, 23 kind of level is where it should come and then result into some backtest. So I'm bearish on General Motors. I have carried my position as well. So that's what it is for General Motors. And next is Nvidia.
You said you're actually thinking the top on Nvidia is out in already.
Yes. So I believe top in Nvidia is already in. And that I will try to prove. I mean, it's not to prove anybody, it's just for me myself. And it's very difficult to carry shorts into it, although I have carried small position short into it because it's a beast. Let me hide all the drawings first. Let me say why I'm bearish. Of course, you have seen the megaphone top, which I drew just about a few seconds ago, and I have hit it in already. So what you see here is it's a multi-year pattern wherein the stock has been making highs and highs and highs. First here around 71, then here around 343, then here around exactly around 500. But did RSI make any new high? It did not. I mean, of course, it did reach those overstretched positions, overstretched, almost overstretched, but it did not make any high. We call it as a negative divergence. Normally, negative divergence on a daily, bearish. On a weekly, again, very bearish. On a monthly, very, very, very bearish. The kind of reaction that you saw here, that would be peanuts compared to what might come ahead. And the reason I'm saying this is that look at these two candles. This is last month candle, which is September, engulfing bearish. And what we are seeing this month already, it's already inverted hammer. And now let me bring back my all the drawings and go back to the daily chart. Head and shoulders already almost forming up. Of course, it should result into this particular channel breakdown as well, which will result into head and shoulders completing its pattern and probably trying to break down around 410 or something like that. So for me, Nvidia's stop is in looking at the monthly charts. Daily candles after this breakdown, as and when this breaks down of the channel, which should probably be on Monday or Tuesday, that would give me another signal that yes, it is trying to go lower. Because if the stock wanted to go higher, it wouldn't be forming this thing and trying to reverse from here. It would have probably rallied some more, maybe carried its market weight on its shoulder again. But how long and how far can he do that? So after some point, this petering off effects start falling in, and that's what I'm assuming that Nvidia should be doing right now. So this is the reason why I'm bearish Nvidia, especially the monthly candles and the daily candles.
Awesome. Thank you, Manoj.
Thank you.
Wanted to have a shout out to CM Fan and also Rahul. They've both also been commenting almost.
Thank you both of you. In fact, we really appreciate the kind of comments that you guys have been doing. Then I mean, they've been, of course, asking, interacting with me on Twitter as well. But thank you for the kind words, and whatever kind of criticism or whatever you have, feel free to shout it out, and we'll try to resolve it as and when we can.
Thank you guys very much. Thank you, Manoj. Talk to you.
Thank you. Bye bye. Have a great weekend.